Hi friends, we'll do a problem on the written down value method. Let us take down a simple question. Asset purchased on 1st October 2021 for rupees 10 lakh. Rate of depreciation is 10% per annum under WDV method. Prepare asset account and depreciation account for year ended 31st March 22, 23, 24 and 25. So you are asked to prepare asset account and depreciation account for the years ended 31st March 22, 23, 24 and 25. So how do you deal with it? Let us start preparing the accounts now. The years are financial years. We are following financial year. So I'll prepare the asset account. We also have to prepare the depreciation account. Asset account, debit, credit, depreciation account, debit and credit. So asset was purchased on 1st October 21 for rupees 10 lakhs. So on 1st October 21, I'll pass the entry asset account at R2 bank. I have debited the asset account with 10 lakh rupees. The rate of depreciation is 10% per annum under WDV method. Prepare asset account, depreciation account for the year end 31st March 22, 23 and 24 and 25. So on 31st March 22, I have to reduce the value of the asset by the amount of depreciation. How is it calculated? It is 10% per annum under WDV method. So how will I calculate the depreciation for first year? Depreciation for year ended 31st March 22. 10 lakh is the value of the asset multiplied by the rate of depreciation 10%. But during the financial year 21-22 you have used the asset only for 6 months. So you have to divide it by 12 and multiply it by 6. The year started on 1st April 21. It ends on 31st March 22. We have purchased the asset on 1st October 21. So from 1st October to 21 only 6 months have been used. If you do not apply this, you will be calculating depreciation for the full year. So by doing this, you are using only half of the depreciation. So 1 lakh into 10%. Sorry, how much was the value? 10 lakhs or 1 lakh? It is 10 lakh. So 10 lakh into 10% is 1 lakh. Into 6 by 12 is 50,000 rupees. So 50,000 is the depreciation for the first year. So on 31st March 22, I'll pass the entry depreciation account at R2 asset. So by depreciation 50,000. In depreciation account on 31st March 22, I will write to asset 50,000. Now I will have carried down value of 9,50,000. 1st April 22, to balance brought down. I will have 9,50,000 here. The balance in depreciation account is transferred to P&L account on 31st March 22. I'll write by P&L account 50,000. This goes away now. Now we go to the next end of the next accounting period. The year starts on 1st April 22. It will end on 31st March 23 by depreciation. So how will we calculate the depreciation amount now? It is on the WDV. This is the WDV for the year. 9,50,000 into 10% into 12 by 12 because we have used the asset for full year now. So it will be 95,000 rupees now. So 31st March 23 carried down balance. What will be the balance now? To make both the sides equal, 9,50,000 minus 95,000. It will be 8,55,000. This will be the balance. 1st April 23, to balance brought down 8,55,000. 31st March 23, we'll write here to asset 95,000. 31st March 23, it will be transferred to P&L account. By P&L account 95,000. March 24, by depreciation 8,55,000 into 10% for the full year into 12 by 12, it would be 85,500 would be the amount of depreciation for the year. 31st March 24, I will write to asset 85,500. So what would be the balance carried down now? Let us use a calculator and find out. $8,55,000 minus 85,500. It is 7,69,500 is the balance now. 7,69,500 is the balance. That will be the carried down balance. 1st April 24, brought down balance will be 7,69,500. This amount 85,500 will be transferred to the P&L account. By P&L account 85,500. Now 31st March 25, by depreciation the balance would be 76,950 rupees, 10% of the opening balance. 7,69,500 into 10% into 12 by 12. Balance carried down. The balance left would be 7,69,500 minus 7,6950. It would be 6,92,550 is the balance left. So this is the closing balance now. 31st March 25, to asset in the depreciation account will write 76,950. By P&L account, this amount will be transferred to the P&L account, 76,950. Now if you draw a graph for the depreciation, first year, second year, third year, fourth year. First year it was less because it was used only for 6 months. It will be somewhere here, but remaining years the depreciation has reduced. If you observe here, first year if it was used for the full year it would have been 1 lakh. Second year it has reduced to 95,000. Third year it has reduced to 85,500, and the fourth year it has reduced further by some amount and it has reduced to 76,950. So the depreciation is reducing every year, and the rate is being applied on diminished value of the asset, written down value of the asset every year. That is why this is called as the WDV method of depreciation. So this was a small illustration on the written down value method of depreciation. Thank you.